In exercise 218, we're continuing forward with our same help today example. We've already done our income statement. Then our next statement was our statement of retained earnings. The last statement and the third one that we should prepare in the order is going to be our balance sheet. I like to think of the balance sheet as a snapshot of the financial position of the company. Unlike the other two statements that we prepared that show activity over a period of time, remember those showed activity for the period of August. Unlike that, our balance sheet is going to look at the company at a specific point in time. Whether, for example, that point in time is the end of a month, a quarter of a year, in our particular example, that's going to be at the end of the month because we're preparing our financial statements as of August 31st. So we're going to show August 31st. Start out similar that we indicate the company name, Help Today. Then we indicate which financial statement we're preparing the balance sheet, but instead of for month ended August 31st, a very subtle distinction, this is a point in time of the balances of these accounts as of August 31st, not over a period of time. Take note especially of the word balance in the name balance sheet. The balance sheet is simply just an inventory of all the assets, liabilities, and equity over a period of time. It proves out that the accounting equation is still in balance for the company. So it's proof of that. So let's go ahead and start moving forward. We're first going to prepare a listing of our assets and total those up. So let's indicate all of our assets here. Cash for $25,000 is going to be listed first. Then accounts receivable of $16,000. Office supplies of $4,200. Land of $43,000. We need a place to operate and we need a structure to operate out of. Also, we've got office equipment or equipment of $34,000. If we add all of these up, $25,000 plus $16,000 plus $4,200 plus $43,000 plus $34,000, we get total assets of $122,200. So those are the total items we own that we're going to carry forward to benefit our future. Let's cross our fingers that our total liabilities and equity are going to come out to that same total amount. Our liabilities are our claims by our creditors against those assets, so the first type of claim. Liabilities are going to include accounts payable. So we're going to list accounts payable for $9,500. Now, this company's just at its beginning. Normally, companies will have other liabilities, whether it might be, for example, notes payable, taxes payable, interest payable, or something even like unearned revenue. Again, this company is at its beginning, so only has one liability. If it had more than one, we probably would have listed a subtotal for the total liabilities. But these are the creditor's claims against these assets. The other type of claim against the assets is the owner's claim against the assets or equity. So we'll move on to that next. Equity includes two major overall components. One is common stock. So we're going to list common stock for $110,000. That's the amount of ownership interest invested by our shareholders. So what they've invested into our corporation. The other important component of equity is retained earnings. So it's not an investment by our owners or what they've paid, our shareholders have paid in. If you remember our retained earnings from a statement of retained earnings, that's all our revenues and expenses since the beginning of our company, minus any distributions we've made to our owners and stockholders, again, since the beginning of the company. You may be looking at this and saying, well, I don't see any retained earnings, so therefore I guess this dollar amount should be zero. But if I make this zero, I don't think 119,500 equals 122,200. So I've got a problem that my owners and creditors claims don't add up to equal my assets. Well, keep in mind that our retained earnings balance isn't going to be listed here. Where we're going to need to pull that amount from is going to be our statement of retained earnings that we just prepared. The last statement we prepared, and that was $2,700. We'll prove that out. We'll show them again. Just trust me for now that that's going to come up to be $2,700. And remind you that that included revenues minus expenses minus any dividends or distributions. Now, I would have also had to factor in the beginning balance of retained earnings, but it just happened to be zero in this scenario. When we take all of those into account, and we'll summarize them next, that's retained earnings of $2,700 that came from our statement of retained earnings. If we add our total equity or owner's claims to our creditor's claims, so $9,500 plus $110,000 plus $2,700, I do come up to total liabilities and equity of $122,200. So I'm happy my accounting equation balances out. My creditors and owners claims balance out to the total amount of my assets. Now I said that I would prove out that this came from the statement of retained earnings. So I have to do a couple steps to get there, but remember we started out with our income statement. Our revenues minus all of our expenses equaled an overall net income of $17,700. Then I looked at the change in retained earnings, happened to be zero because the beginning of the business, plus any net income or net loss from the income statement, minus dividends of $15,000, gave us an end of period retained earnings balance of $2,700. So if you give me a second to backtrack a little bit, that's the amount that we're going to record on the balance sheet.